Hey, my name's James Wilson and welcome to my YouTube channel. Now, the OBR is now predicting that house prices are going to drop by 10%, but there is a very big but in this. They're not expecting it to drop much this year. Now, that is going to get a lot of you excited in the comments, I know. So be kind. Remember, this video, I am just giving you somebody's opinion. The OBR, which is the government's, who the government use for their stats. Now, this could be wrong, but it could be right as well. And so what it does show, whatever happens, is that they are being way more optimistic about house prices than they have been for a long time. Now, when the pandemic started, we thought that we were going to have huge crashes. Then we had the mini budget and we thought, wow, this is going to absolutely kill the market here. Things have changed. The market adjusts. And it does make sense, a lot of your comments where you say, look, if you look at this figure over here and what's happening over here, logically, you're right. The market should be going down a lot more than it is. However, if you're a property investor, it isn't really a major concern if you buy right. So if you were to buy a new build property, for example, then you could get yourself in a sticky situation because they start off overpriced, you lose a chunk of change up front. As a property investor, you should always be making money when you buy the deal. And that's why you need to buy below market value. So you can get a below market value property that covers you in case what they say is going to happen potentially does happen. And then you need to look to add value to that property. If you're doing that, then I would carry on investing. I think you can still make some very good money. So let's get into the figures. And so yesterday we had the budget, great video that I put out yesterday. If you haven't seen that, go and check that out on the videos. Nearly 2,000 views on that one. And it was our birthday yesterday. And it's still our birthday week, I guess. So give us a quick like and a subscribe if you haven't already. So these figures are really interesting. So the OBR is saying that they feel that over the next few years, that's interesting. Over the next few years, they feel that house prices are going to go down by 10% from the peak that we had last year. Now, this is where it gets even more interesting. Remember, this isn't me saying this because I know. I had some guy yesterday comment, you are the worst YouTuber in the world. The worst YouTuber in the world. You have no idea what you're talking about. But with this video, I'm just giving you information from the Financial Times, from the Daily Mail, from This Is Money. I've collated all that information and I'm just giving you that, right? So this isn't my opinion. However, they're saying house prices will go down by 10% until 2026. Now, here's where it gets interesting. They're saying that the market is already down since the peak 3 to 6%. That could be right. We've seen some drops at the end of last year. So that is around 3%. It could be a little more because remember there's transactions that are going through at the moment that haven't yet completed, right? So they're saying that that's what's already happened out of that 10%. So potentially we've got 7% or a little less than 4% to go. Interesting, right? Now, this is where I know a few of you are going to get really excited in the comments. They're saying that this year, for the remainder of 2023, that we're only going to drop 1.1%. Now, I don't know if that's right or wrong, but I hope it's right because that is a great number for me. And I've got a portfolio, remember, I've got a decent sized portfolio. I don't want the market to go down massively. But I also don't want the huge rises that we had the last 2 years because I want more predictability. That makes doing deals that little bit easier. Just a steady rise because I know when I do a deal, I can add value to that deal and make my money that way. I'd rather make money adding value than the market. And then in the long term, the market will bring my properties up in value. So we're saying 10% down. We're saying we've already dropped 3 to 6%. We're saying 1.1% this year, which is interesting. We're already up a little bit, so we might have some big drops. That means we might have a 1% month or something like that coming around the corner. Now, they're saying next year, 2024, What do you guys think of this pen as well? Actually, this is a new pen. I know some of you commented that I needed a new pen, so I've used a new one today. In 2024, they're saying 5.7% drop. Now that might be right, because then interest rates will have peaked and there'll be more people coming off their deals, right? So there'll be more people coming off their deals. They will also have the fact that we will have people that are selling today and not getting any luck might start reducing their prices, right? And so if they start doing that by this summer, then those deals will complete in 2024, more than likely, right? And so at the moment, what's happening is people just aren't really reducing their property prices. What we're seeing is people are buying between plus or minus 5% around the asking price. So you're not going to get a 50% crash or a 30% crash when we're being told by multiple different sources that the prices that people are securing their deals at are 5% plus or minus. You can't get a 30% crash in that scenario. Now, what is interesting as well, which we've talked about, is transactions are down 20%, right? Now that kind of helps the market because it means that there aren't lots of options out there and people might have to pay more, right? And so there isn't just lots of people looking, there isn't lots of people selling. The market is just kind of stagnant. A lot of people have a wait and see approach, and that's good, right? That's what you should be doing in a market. You should be really being certain on what you do. But if you come across a house and you can afford it and it works for your family, don't wait. You don't know what's going to happen the next few days, right? You never know, like the next few years. You can't be certain. No one has a crystal ball. Anyone that's looking at charts and predicting, even the OBR, they don't know for certain what's going to happen. But if I found a nice family house that I wanted to live in, that was good for my family, the deal stacks up, I'd go for it. Same with investments as well. If I find deals that it work and stack up, I'll go with those as well. And so that's important that you really, really understand this. Let's see what else they're saying here. So they're saying that prices will start going back up in 2025. And so in 2025, we're expecting 1.1% increase. So basically flat. And in 2026, they're expecting the market to go up again in 2026, 3.4%. Now, all of these places can have figures that just don't add up. Things change, right? At one point after the mini budget, we thought the interest rates were going to go to 6.5% as a base rate. It's now looking at they're going to peak at 4%. It's now looking that potentially by the summer, they will potentially start to drop. There's an article, if you want to read it today, in the Financial Times talking about how the Fed may have to pivot because of two things. One, inflation is starting to come down and it's getting more predictable. Two, there's a bank crisis and banks are really struggling with these interest rate rises, so they can't cope with much more. The fact is the banks could not work, a lot of them, on a 6% base rate right now. They've got too many difficult investments and stuff that they can't get out of, and so it isn't possible for rates to go up. I've seen some of you commenting on here saying, look, inflation's 10%, rates need to go up to 11%. It isn't going to happen. Like the financial crisis would be worse than 2008. Read about it. Go and read other sources. But this is interesting that they're saying 10% down by next year. But we're talking about that we've already had a big chunk of that. That really is interesting to me because I was saying I felt around 8% down this year, and I still stand by that number. So those of you that are killing me in the comments already, I'm saying that I still think it could potentially go down 8% this year. However, they're saying 1%. That makes a big difference. And what's very interesting is there's a lot of other people that talk about buying houses and selling houses on YouTube. And there's one guy that talks about a 35% crash. But what we can look at the data from the mortgage companies, right? The Halifax and all these other lenders, they're telling us that they can't see this big crash on the horizon. They see like variability in pricing, but not what people are expecting. And they're doing deals today. They've got people getting mortgages agreed in principle today that will now probably complete in October. So there's not much room in there for something major to happen in order for that to go down. Now, what could happen, and I think is a possibility, is if the banks do suddenly run into a major crisis, then you will get freezed lending like you did in 2008. That's the biggest problem on the horizon. I don't think it's inflation now. I think it's liquidity of money. And so if that becomes a problem, which it might not, because Credit Suisse got bailed out today with 50 billion. So who knows? But let me know your thoughts. Be kind. The market, is it going to drop? Comment below. Do smash the like button, guys. Do subscribe and hit the bell. Check out all the other content. I'm looking at doing some deals for £1 at the moment. If you want to know how that works, go and check out this video right here.